Hey everyone, welcome to another episode of Inside the Markets with Caleb and Brown. Today we're going to be talking about what's happened in the last month and what lies ahead. This exciting future. So starting with a February check-in, the biggest news is undoubtedly the Bybit hack that occurred in February. There's also tariff threats, geopolitical tensions, and overall a crypto market pullback with some spikes and with some dumps in and amongst the action. So we'll get into all these throughout the day. First of all, we'll start with the crypto market cap from February 1 to March 4th. The market remained surprisingly flat throughout the month of February. It gave a lot of investors some time to breathe, take it easy and relax and ease into the new year. It is common for January and February across markets to be one of the more stale, stagnant periods of the year, but come end of February, that certainly changed. As we can see here, come the last week of February and as we entered the month of March, volatility absolutely made up for lost time. So the market started to come down dramatically as we ended the month of February. However, as you can see, we had a massive pump in the early stages of March, followed by a massive dump, which we'll get into shortly. But it's worth noting that is the first time in history that Bitcoin, wick to wick, has had a $10,000 candle straight up. Which is fantastic news and it's great, but unfortunately it retraced entirely the very next day. So the volatility is back, your break from February is certainly over. So we hit extreme fear. The fear and greed index is one of the leading indicators, I guess if you want to call it that, in the cryptocurrency space. As a reference point, in 2021, when the altcoins were really starting to roar in the space, unsurprisingly with the benefit of hindsight, we reached extreme greed. With the benefit of hindsight, that would have been a perfect time to sell your altcoins. On the flip side of that, we experienced extreme fear after the collapse of FTX when Bitcoin was trading at $16,000 back then. So what we can confidently say here is, in an ideal world, if you could purchase during periods of extreme fear and sell during periods of extreme greed, you would perform quite well, historically speaking, in the crypto landscape. It's all easier said than done though, and a lot of investors fall into the trap of wanting to sell and wanting to exit the market, never talk about it again, the second that the market starts to turn for the worse. And then of course, when Bitcoin is rallying towards all-time highs or the altcoins are reaching new highs, everyone wants to purchase it. It is human nature, unfortunately, so let's try and be ahead of the curve there. We can see Ethereum and how disappointing Ethereum has continued to be as we enter 2025. Not only is Ethereum down, it actually went down further than its starting points pre-Trump administration. The November pumps on the basis of Trump winning by a landslide in the US election, it's retraced all of that. In fact, a few hours before recording this video, Ethereum was actually trading under $2,000 per unit. Bitcoin, of course, also experienced a dump and, as always, leads the market in its broader movements. However, it certainly has not retraced all that bad, nothing like Ethereum. So global macro keeps markets moving. Global liquidity cycles, interest rates, and inflation often dictate risk appetite. Stock market weakness will always make its way into the crypto sector. It's critical to remind ourselves how small and nascent the crypto asset class is in the grand scheme of financial markets. And as a result of that, in times of economic uncertainty, the risk on asset classes such as cryptocurrency are ultimately going to be sold off. I've said this in previous videos. If an investor has got several assets in their portfolio, one of them is liquid, it's transferable, it's easy to get rid of straight away. If that happens to be cryptocurrency, that is going to go. You're not going to sell the family home. You're going to probably sell your altcoins. And further to that, the big one is tariffs. So as markets continue a tug of war between liquidity tightening and long-term institutional adoption, tariffs are certainly becoming a talking point for the market. So what happened the other day was the market started to pump dramatically on the basis of news of a strategic crypto reserve and all the coins that are going to fall into that. There was mention of XRP, Cardano, and of course, Bitcoin, Ethereum, and Solana as well. These coins surged anywhere from 15 all the way to 50%, 60% for some of them. However, the following day, Trump announced tariffs and confirmed his plan and confirmed there would not be any delays, which caused the market to start tumbling. So 25% on all imports from Canada and Mexico, 20% on all imports from China. That is up from 10% previously. Why do tariffs impact the market so much? Well, several reasons. A higher cost for companies as a result of the higher cost of importing these goods in the US. translates to lower profits. In turn, stock market declines. Retaliation in the world of tariffs is big as well from other nations. If their global trade is being disrupted by US tariffs, in many cases, they will impose their own tariffs. And that is, of course, a concern for investors. And then, of course, overall, this leads to volatility. It makes investors unaware of what may happen next. What is the economy going to look like in a day from now, a week from now, a year or two from now? And as a result of that, that causes friction, it causes uncertainty, and ultimately leads to sharp volatility, in this case, rather negative volatility. And of course, as always, if the broader markets collapse, high-risk assets such as crypto will collapse alongside it, but they may recover sooner. So some optimism there. Now, we've got to talk about the largest crypto hack in history, which happened recently in the month of February. Just when we thought February was already a stale and stagnant month, we certainly got more than what we were asking for with the terrible news of the Bybit hack of $1.4 billion US. This is the biggest in history. It surpasses Poly Network, Ronin Network, FTX, Mt. Gox, you name it. It is colossal. Now, what actually happened here? Well, hackers infiltrated Bybit's Ethereum cold wallet. The fine technicalities of that, you can do deep dives in online. There are several great articles explaining precisely how the signatures and so forth were able to be compromised and engineered and so forth. Ultimately, 400,000 units of Ethereum, valued at over $1.4 billion at the time, was stolen. The impact of this, of course, is horrible for Bybit. However, customers have already been ensured that they are made whole. Bybit was able to fill the void of the missing Ethereum, and ultimately customers have been no worse off. Credit where it's due, the Bybit CEO demonstrated commendable transparency throughout this process, staying up all throughout the hours, live streaming the updates, and tweeting directly update by update as they unraveled this problem. Hopefully this sets precedence for how leaders in the space should handle the unfortunate crises that ultimately plague the cryptocurrency space. And hopefully the transparency can be reflected by other businesses too when they detail how they address these problems step by step instead of hiding behind the mask of a PR campaign or anything of that sort. So pullbacks, well, this is nothing new. 2017 bull market, we saw 28% plus pullbacks in that period. When you have a bull market or you have a bear market, it is not straight vertical lines as much as some people might like it to be like that. As a result of that, in order for coins such as Bitcoin to reach new highs, they are going to go through cyclical processes where the market has to cool down. They need to correct themselves. They need to have some people taking profits. This is a natural process. Further here, we have a chart detailing the current cycle drawdowns of this 2023 to 2025 bull market. So far, we've had 6 instances where a 15% plus pullback has come through. Now, past performance is not an indicator of future performance. However, it's very critical to note that every bull market has pullbacks. So you need to keep yourself level-headed and stick to your plan throughout these periods and not be emotionally invested in the space. US Strategic Crypto Reserve is announced. So as you can see on the side of the screen there, Donald Trump, the president of the USA, detailed on Truth Social and of course Twitter, X, detailing his plans for this reserve. Now, to a lot of people's surprise, it was not just Bitcoin. It included Ethereum, XRP, Solana, and Cardano. Now, the market's reaction to this was fantastic. As I mentioned earlier, it was the single biggest wick Bitcoin has had in dollar terms ever in the history of Bitcoin. The whole market rallied. There were several altcoins up more than 50%. Coins like Cardano actually made up for all of the decline they've experienced during January and February and went back to their local highs last seen in December. XRP, which peaked, almost hit all-time highs in a unit price. It certainly hit all-time highs in a market cap. So the composition of this reserve includes several coins, which has caused a lot of debate and mixed opinion. Ultimately, Bitcoin is not going to surprise anyone. Ethereum surprised few. Solana and particularly Cardano and XRP caused a lot more controversy and divide. Ultimately, a lot of these coins, all of these coins in fact, did exceedingly well after this announcement, with Cardano and XRP climbing 30 to 60% in price in the 24 hours that preceded. They actually reached price points which had not been seen since their local highs in December. So it's crazy in the crypto space how a coin can go down for 1 or 2 months in price and seem to be bleeding out and left for dead. Yet any small amount of news or any kind of catalyst can rally its price right back up to previous highs. Now, this announcement caused a lot of divide. We've provided a few screenshots here of the variety of opinions, but ultimately, Bitcoin did not really surprise anyone as forming part of this. Bitcoin is certainly the industry leader in the cryptocurrency space. It has the most legitimization and infrastructure built around it, so there's no surprises there. The altcoins mentioned in this basket of the reserve certainly caused a lot of debates. The community had mixed responses, many people saying these coins should not be in there, many disagreeing. At the end of the day, ultimately, the market surged on the basis of this news, and more information is certainly going to come in the coming days and weeks. All this divide and all this speculation surrounding Trump's announcement here has certainly made Twitter and the world a fairly interesting space as a crypto investor. There has been some further controversies, though, with one wallet on Hyperliquid trading a tremendously large amount to the sum of a 50x leverage position, which was totaling $200 million. They took a trade and they longed the market, Bitcoin and Ethereum, right before this announcement, and then later shorted the market after previous announcements, which dumped the prices of cryptocurrency assets. Such controversies do plague the space, and they certainly don't do wonders for the legitimization which we're all looking for as cryptocurrency investors. Read more about that online. There's plenty of speculation and interesting things you can read there. On another note, some states have rejected a Bitcoin reserve. Some states are progressing with a state-level Bitcoin reserve. The states of Arizona and Utah have made progress here, as you can see. Things are looking quite optimistic. Several states, I believe 5 of them, have actually declined having a strategic reserve for Bitcoin, largely stating regulatory uncertainty and volatility concerns, which is completely fine. There's so many states in America and everyone is entitled to have their own governance within that. Ultimately, this is something that, paired with Trump's announcement at a federal level regarding a reserve, is particularly exciting for the space. March 7 is a big day with the crypto summit. We're hoping to expect some nice announcements in that period, whether it's concerning capital gains tax on cryptocurrency assets in the US, whether it's more specific surrounding this Federal Reserve for crypto assets. Who knows? There's a lot that's going to happen, and the volatility is undeniably going to continue. So as we look further ahead through the month of March, the major developments that we want to be keeping an eye on are Trump's trade policies. We've seen the majority of our volatility in 2025 so far has been predicated on the back of tariff announcements. So trade policies, trade war, however you want to spin it, that is a topic of interest. Geopolitical tensions, announcements concerning conflict in the Middle East, in Ukraine and the like, is undoubtedly going to impact the market. Irrespective of any progress that happens in these conflicts, it will always impact the broader markets and investor sentiment, which will trickle itself down to cryptocurrency. The White House Crypto Summit on the 7th of March, as I mentioned, is undoubtedly going to have some major headlines, and that will be moving the market. So certainly make sure you're awake during that period of time. And the US Fed rate decision on the 19th of March. Fed announcements impacted the market dramatically over the course of 2024. They have not been as impactful throughout 2025 just because the scale of broader geopolitical tensions, trade concerns, economic concerns have just taken precedent of what dictates the market's volatility. But nonetheless, these are critical indicators for the economy in the future ahead, which will ultimately impact cryptocurrency assets. And lastly, crypto policy announcements. Again, similar to Fed announcements, the SEC was a large driver of volatility in 2024. They had the capacity with negative news to drastically impact sentiment, drastically increase fear, and suppress the prices of some of these assets. And then on the flip side of that, when the SEC was more forthcoming to the cryptocurrency sector, the announcement of Gary Gensler's retirement as chair of the SEC, the Trump administration getting into power and the presumed impact that would have on the governance of the SEC, this caused positive sentiment in the market. However, as we lead into 2025, we have not seen those catalyst events of SEC announcements and decisions really driving much volatility. For example, the SEC has dropped several of its lawsuits against major cryptocurrency exchanges and platforms in the USA. This has not really moved the market amongst all the other action that is happening. So markets change, investor sentiment changes, and the catalysts that drive outcomes change dramatically. Please reach out to us if you have any questions, if you'd like to have a call with your broker. I hope you've enjoyed this video, and hopefully we have a very exciting month of March. Thank you.